Welcome, folks. Um, this is DJ. We had here's today's price action. So in this video, we're going to see if the exotics respect ICT concepts. So here we have GJ. So today I can see that we had three setups. We had these sell from this fair value gap right here to a discount inside these fair value gap, and then we had this run to the upside trading inside this fair value gap, and then here we had PPI at 830. So we had that sell off aiming for the midpoint. So here we're going to see if it respects ICT concepts. So here, as you can see, from this swing low to this swing high, you take your fib, anchor it to the low, to the high. As you can see, we traded into a discount. What was to the discount? In the discount level, we had this inefficiency. We traded into that during the New York Open kill zone. We had that, and then we went back to a premium, traded inside this fair value gap, and then we had this sell off to a discount. So we had that, and during London Open, we traded into that. This is institution order flow entry drill. We traded into that, aiming for these lows, and eventually trading inside these inefficiency. So that is it. So if we head over to the 1 minute chart, we see how reacted off of this level during the London Open kill zone. We had this sell trading inside this inefficiency during the New York Open window of time. We had this as ICT silver bullet trading into that. Then now we had same. We had PPI trading to the downside, aiming for these lows, and again this inefficiency. So if we head over to the 1 minute chart, we had so here was the trade. We took these relative equal highs, as you can see. We traded into this inefficiency, and then we broke lower. So we had this inefficiency right there. So we treat that as an inversion fair value gap, placing our entries in that and our stop just above this high. So if at all we were to take that trade, this would have been the entry, aiming for the midpoint of this inefficiency, because it was on a premium level. So that is a total of 8.89 R trade. So that was the first trade. We had that, so it could be taking partials just below here, and then moving a stop, trailing a stop. Maybe you could have been stopped out right here, but already you could have paid yourself. So partials never fail to pay. So during the New York Open kill zone, we had this swing high. We traded into the inefficiency right here. We then shifted higher. We had these let me zoom in a little bit. We had this order block right there. So as price was hitting this order block, you could be going long that, placing your stop just below these the midpoint of the inefficiency. So we had these as our entry, so you could have gone long right in there, or we had these as an inversion fair value gap. So as price was moving to the upside, placing your entry right there and your stop just below this low. So we had these. Let's use these just below the midpoint. What could be aiming for? Be aiming for the midpoint of this inefficiency. So that is the midpoint right there. So that's a total of 10.79 R trade. And note that we are just operating inside the ICT kill zones. So it's nothing new, just the same thing. We had that, and also we had we traded into that. As you can see, price respected the midpoint of the inefficiency. We had these inversion fair value gap right there. We had these fair value gap, and we had also had now the 15-minute fair value gap. So you could be going short in these fair value gap right there, placing your stop just above the midpoint of the inefficiency, and then aim for these lows to be taken out. So your first partials would be the midpoint of these dealing range, and then now hold on until now you take out that low. So that's a total of 9.79 R trade. So as you can see, even the exotics respect ICT kill zones, respects ICT concepts, and as you can see, we had number of trades inside the silver bullet window of time. So even yesterday we had we had CPI. So as you can see, it was quite clear. We had these relative equal highs, as you can see them. So our price went to a discount, traded inside this inefficiency, taking out these lows, and then we had that push to the upside, aiming for the buy side. As you can see, we always respect the ICT concepts. So we only went to a discount, taking out those lows, and then we reversed. So as you can see, even ICT, even the exotics respect ICT concepts. So even on Wednesday, we had these relative equal highs right there. While price was here, we traded up, but it wasn't yet the time to trade. So it went down, traded this, and these you can see we had this order block, traded into that at 12, and then we had a shift higher. So we had two things. We had a volume imbalance right there, and also this is very little inefficiency. So we shifted higher. See this swing low, we had already taken sell side. So we traded to the downside, shifted higher. We had this would have been our entry. So as you can see, this candle traded into that volume imbalance at 2:30. So that's in between the ICT silver bullet window of time. So this could have been your entry, maybe placing your stop just below that low, and then anticipate for a run, taking out these relative equal highs, then maybe holding on if you had other PDRAs. So as you can see, price respects ICT kill zones, and it's so simple, because like for instance, during this was on Tuesday, we had with this run to the upside, we traded and left these lows. As you can see, that was signature that we were only going up to go down. So we went to a premium and then came down. We traded inside this fair value gap. We went back up again. We traded inside this order block right there, as you can see. And then now, because retail will treat this as support, now you aim for that. Now we had that and then a reverse. So and as you can see, this only happens during the ICT silver bullet window of time. So it's so simple. Just know where the next drawn liquidity is. It is so simple. As you can see here, it was quite clear. We had sell side that was residing below these lows, and retail will treat this as support because it has been tested more than 3 times. Some of them will see this as a triple bottom, or maybe a double bottom, or I don't know. So they'll treat this as support, and they'll, once price is coming to the downside, they'll place their orders just below those lows, and then placing their stops right there. So you attack that and then you buy those. So as you can see, we had it was quite clean. It goes on and on. So if you just keep on showing up every day, this will be so easy for you. So I guess that's it for today, and until I talk to you next time, be safe.